All right, today we are digging into a huge shift happening in one of the most secretive and powerful industries in the world, venture capital. For decades, it's been a game of handshakes, gut feelings, and closed-door meetings. But now, it's being totally redesigned by data. So let's get into it. It all really starts with this simple, almost kind of stupid question. How does a VC look at a tiny, brand new company, one that maybe has no product, definitely no revenue, and say, yep, that's the one. That's the next billion-dollar giant. It's the central mystery of the whole industry, and the answer to that question is changing as we speak.
So here's our game plan for today. First, we're going to break down the classic VC playbook, the old world. Then, we'll look at why that old system is really starting to crack under pressure. After that, we'll meet its potential replacement, data-driven VC. We'll explore why it's so much more than just a new set of tools, and finally, we'll ask the big one. What does the future actually look like when humans and machines start investing together?
Okay, Section 1, the information game. For as long as it's existed, venture capital hasn't really been a game about money. It's been a game about information. And in that game, your connections, they're your currency.
You've probably heard this phrase a million times, right? But in the world of venture capital, this is not just some cheesy motivational poster line. No, it's the fundamental core operating principle. It's the belief that who you know is directly tied to how much value you can generate. But what does that really actually mean day to day? Well, in practice, the network really does two crucial things. First up is sourcing deals. Getting a referral from someone you trust is a massive filter, right? It means someone else is putting their reputation on the line. And second, it's about diligence. Your network is where you find the experts who can kick the tires on an idea and tell you if the team has what it takes. And if you want to see this in the real world, just look at a firm like Playfair. They look at up to 7,000 pitches a year. A year! And from that, they make maybe 6 investments. So how on earth do they manage that fire hose of information? Well, a whopping 65% of the companies they end up funding come straight from their network. It is, by far, their most important filter. And here's the key takeaway from all this. The network creates something called proprietary deal flow. Think of it like a secret, exclusive channel of information. By the time you read about some hot new startup online, the top VCs, they knew about it months ago. They've already met the founders, and maybe they've already signed a check. This whole game is about speed and exclusive access. Which brings us to Section 2, a system under pressure. Because for a long time, this network-first model, it worked. But now, it is showing some serious cracks. It's being strained by some major new challenges. That is a pretty intense statement, right? It's from VC advisor Jason Ball, and it really captures this growing anxiety in the industry that the old way of doing things just isn't cutting it anymore. The model that's basically run this show since the 70s is finally starting to break. So why is it breaking? Well, it's getting hit from all sides. You've got way more competition, you've got a flood of deals that no human can possibly keep up with, and you've got the simple fact that human gut feelings are often riddled with errors and biases. But maybe the most damaging crack of all is the systemic lack of diversity that these closed networks naturally create.
Let's just make that last point painfully clear. When your whole system runs on warm intros from people you already know, you basically build an echo chamber. And what's the result? Well, in the UK, a tiny 2% of all equity investment has gone to founding teams made up entirely of women. 2%. And the numbers are just as bad, if not worse, for founders from ethnic minority backgrounds. They've received less than 2% of all venture capital. Now, this isn't just an ethical problem, it's a business problem. It means the industry is just leaving huge pools of talent and massive opportunities completely on the table. The network, once the industry's greatest strength, has become one of its biggest liabilities.
So that brings us to Section 3, the rise of data-driven VC. Because in response to all of these pressures, a new player has walked onto the field. One that promises a more objective, a more scalable, and a more inclusive way to invest. The really key thing to see here is just how fast this is happening. Data-driven VC isn't brand new. You had pioneers playing with this stuff way back in 2016. But for years, it was really niche. The real explosion happened just recently. I mean, we went from just a handful of firms in 2019 to over 190 of them today. The trend is clear, and it's accelerating.
Now, data-driven isn't some one-size-fits-all thing. It's really a whole spectrum. On one end, you have firms that are just using third-party data tools to find a few more leads. Then you move along to firms using data to help their human investors make better calls. And then all the way at the other end, you've got firms like Moonfire, which are basically tech companies first and VC firms second. The level of integration is all over the map.
And as you can imagine, this has sparked a massive debate in the industry. On one side, you've got people like Jason Ball, who are pretty convinced that algorithms are eventually just going to eat the VC's lunch. But on the other side, you have people actually doing the work, like Sarah Gamori, who argue, hang on, human judgment, building relationships, that gut feel for a founder, that stuff isn't going anywhere.
And this brings us to a much deeper, more important point. This whole shift, it's not just about getting new software. It's about a fundamental change in the culture of VC and how these firms think, how they operate, and how they even define what's valuable.
So when we talk about an algorithm here, we're not just talking about lines of code. An algorithm, in this world, is more like a cultural artifact. The data a firm decides to track, and the weight it gives to that data, that is its value system written down. It forces a firm to get super explicit about what good actually looks like, instead of just relying on some partner's gut feeling.
And here's what it looks like on the ground today. The reality is that it's not data versus networks, it's a hybrid. Even at a place like Moonfire, which is one of the most advanced data-first firms out there, they keep a perfect 50-50 split. Half their deals come from their data engine, and the other half comes from their human network. The goal here is to enhance the human, not replace them.
So that brings us to our final section, the future. Is it human plus machine? This is where we get into the new, really complex reality of venture capital, a reality that is filled with just as many new questions as it has answers. And this is probably the biggest, thorniest question of all. If we're using data to try and solve the industry's massive bias problem, can an algorithm, one that was built by humans and trained on decades of biased historical data, can that algorithm ever really be unbiased itself? And this right here is the heart of the pushback you hear from traditional VCs like Andrew Sheffield. He worries that AI, because it's trained on the past, will just get really good at finding more of the same stuff that's already worked. But here's the thing. VC isn't a game of averages. It's a game of outliers. It's about finding that one crazy, brilliant founder that nobody else saw coming. And that, well, that might be something an algorithm always struggles with. So what's the real takeaway from all this? Is data-driven VC some kind of silver bullet that's going to fix everything? Absolutely not. Its real power, its true value, is that it's forcing a mindset change. It's forcing this very old, very clubby industry to finally confront its old habits and its entrenched network-first practices.
And that leaves us with one last big question to chew on. As data continues to rewrite the rules of this game, the real question for VC isn't about technology anymore, it's about purpose. Is all this data going to be used just to get a little bit better at predicting a future that looks an awful lot like the past? Or will it be used to finally build a genuinely new one?